Memories of Yesteryear, Monday, 1st of February 2021. Dear Chris, between November 1979 and April 1980, our American school in Karachi was closed. Our teachers had fled the country after the US Embassy, along with our sister school in Islamabad, had been attacked by a mob in late November. Earlier that month, the US Embassy in Tehran had been overrun, hostages had been taken, and tensions in our adults were running high. To add to their stress, at Christmas, the Soviets invaded Afghanistan. We had revolution on one border and an invasion at another. The talk in the living room was all political conflict and coming chaos. But every so often, my father brought up his chats with his friends in Texas about the price of silver and the Hunt brothers. The only Hunts we knew were in a ketchup bottle, bought only when the Heinz or the local Shazam brand had run out. When we returned back to school, it was catch-up for 6 days a week, with a very short summer break. All the great goings-on around us faded as homework took hold. But looking back now, the consequences of those 5 months were severe. Our serene backwater city of Karachi became the new home of fleeing Afghans, along with being the central hub of arms trafficking for fighting the Soviets. The triple menaces of American guns, Afghan drugs, and rigid Saudi religion were brought into our sheltered lives. The region, to this day, still suffers the effects of those 5 months. So what happened to the Hunt brothers? Did their story result in any long-lasting repercussions? The billionaire brothers, conservative oil men from Texas, had decided that silver was their best hedge after Nixon delinked the US dollar from gold. They proceeded to build a 140 million ounce silver cash position and a 100 million ounce one in the futures market. They planned to take physical delivery of the futures silver in March 1980. This pushed the price of silver from $5 to $50, and the brothers' position was worth $10 billion, $150 billion in today's money. The Volcker-led Fed deemed such price action speculative, and in November 1970 told banks not to lend for commodity collateral. They followed up with a series of rate hikes, and in January 1980 they limited the number of silver contracts owned per speculator, and then they limited the number of future contracts for delivery. All this was enough to douse the flames of speculation and force a 50% price drop and a massive margin call on the Hunts, who, by the end of March 1980, capitulated. This ushered in the age of the US Treasury as king, and the stock market as a respectable venue for investment. Commodities perished, with only occasional flashes of interest. The rule changes, specifically engineered against the Hunts by the authorities, brought us 2 winning assets, bonds and equities, that endure till today. Rule changes demonstrate how easy it was to destroy confidence. Today, we are seeing a replay of this in the equity markets by the actions of Robinhood, its hedge fund partners, the clearinghouses, and the whispering regulators, who are altering the rules of investment by increasing margin, suspending trading, and limiting orders. Another pivot feels to be in play, and once again we are languishing at home. But now I am 4 decades older, and at least I have no homework to do. Best, Mustafa.